We are back at it again here with another video with Invest for Tomorrow. To all the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button, tell me when you watch this video. Helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So here we are with the S&P 500 index. We're going to look at it from the broader perspective and narrowed in. And we're also going to look at the SPY where we could see the pre-market and after-market hours. And today our SPY bot sent us a bear indicator since 10 a.m. and put options were up 300 to 400% at their highest points of the day. This is our new release that you can now gain access to as well. The link is down below in the description to the 42 vision indicators to receive the clarity you deserve to navigate through the volatility of the markets and maximize on opportunities. And our SPY bot sends us direct notifications over at the Discord to give us that edge over the markets and what's going on within the charts. And as you could see it, the SPY pulled downwards and hit a newer low. Now we're gonna break it all down today, what the 10-year treasury is showing and what the charts are showing. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. It was phenomenal and beyond expectations. Within a red day, we managed to find a home run. And if you guys want to know what stocks I watch early on every single morning in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us. We're going to jump right into it here with the SPY, 10-year treasury, and all the charts and everything going on with 42 vision and ultimate 42 vision, the bull and bear indicators. So the home run of the day was spectacular and beyond expectations. And if you want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So this is the one stock I was watching this morning, HTCR, and within the volatility of today's big jump and pullback, we still managed to find a home run. Even though the markets were red, it was sitting sideways in the pre-market, got that bull indicator on ultimate 42 vision, went into strength on 42 vision and hit a highest point of 25% plus before pulling back and getting that bear indicator, guys. If you guys want to know about these stocks early on in the pre-market, before they take off and they're looking like potential possibility of opportunity, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index. And when you look at this, we've been pulling back for the last 2 days, and it all started with yesterday's CPI data. Today, the fear continued overall because of the CPI data. Some of the Fed chairman's responses to the CPI data that they want to see 100 basis points by July. And on top of that, today, consumer index report came in hotter than expected. I drew lines here on some of the most important ones, which were the orange and red, and they all came in at an expectation that turned out to be negative for what was expected, right? And the consumer sentiment came in at 61.7, expected was 67.5, and the prior one was 67.2, guys. That right there had a big effect overall on Friday, today, when the markets were open. And then on top of that, the catalyst from yesterday, different statements of fear being thrown around, and a lot of other issues going on aside from the market that can affect the market, which made oil prices go higher. And then you had the VIX flying higher, which we're going to look at together. And on top of that, we had this information coming out, and that is the board meeting, which is an expedient, right? Which creates the uncertainty that this is not just an expedient meeting, if not an emergency one, at 11:30 a.m. on Monday, February 14th, 2022, which is this upcoming Monday. This actually caught a lot of people off guard, and we're going to talk about the CPI data and the points that came in a little bit hotter and a divergence that I noticed. I explained it in yesterday's video, but it's your first time coming across the channel and watching these videos. I want you to be aware of this as well. Now, with everything going on and the VIX actually going higher, as well as gold, if you look at gold, I mean, it was flying up high. The VIX was flying up higher, creating even more fear, and it's the measurement of fear and volatility. That lets us know that things were getting very volatile. And look at the pullback, right? While those two were going up, gold and VIX, the SPY was going down and the overall markets. Now, the low that we hit today was 439. If that gets broken through, we need to watch. We're not that far away from the support way down here of 420 and also 426, 427, give or take. Super important. I'm going to pull up Ultimate 42 Vision, the bull and bear indicators. You can now receive access to this as well. The bull and bear indicators, the link is down below in the description to the 42 Vision bull and bear indicators. And by joining, you will receive the clarity you deserve within the volatility of the markets to maximize on opportunities no matter which direction stocks are going. As the volatility actually persists, opportunities can be found every single day. And with 42 Vision indicators, one can see the dips, right, which is the white with red borders, and the rips when it shifts from white with red borders to red with green borders, like you see right here, and then that full green of strength. Or perfect example is this right here, right? The dip area shifts into strength, and then when the shifts go back into weakness, guys, as well as the extra layer of confirmation of the bull and bear indicators. Now, here we are, the SPY under a bear indicator since yesterday. If I pull up the 4-hour, we shifted back into a bear indicator. This is super important because this bull indicator was the one dominating the chart, but very short-lived, lasted about a week and a half. And here we are pulling back. And then the key level that I'm watching is for the 1 day to shift into a bear indicator. Right now, we're under a bull indicator. If all this volatility continues and no bear indicator pops up, this might continue to dominate and we may reverse. But when you look at the bigger picture, which is the one I've always talked about, it's the 1 week. You could see here that we've been under a bear indicator, and these do not pop up every day. The last one was back in the 2020 market crash and 2018 as well, in that correction and crash towards the end of the year. And then the bull indicators popped up and they lasted each about a year and a half, up to almost 2 years, right? Every time they pop up, they last a while. And same thing with the bear indicator. They don't pop up for just one bar. They pop up for several weeks to months at a time. So we're in a lot of volatility right now, but the main thing I'm watching is if this bear indicator gets negated by a bull indicator, or if this bear indicator, through all this volatility and in the microscopic perspective, right, when we zoom in, all this movement gets negated or holds true and it continues to pull things down. No bull indicator pops up on the 1 week, and that 1 week bear indicator continues to dominate, and we continue to retest the lows here. And what I'm going to be watching is, are we going to break through those lows to reach newer lows and new support levels throughout the next few days and weeks? Those are the main things right now with the bull and bear indicators on 42 Vision that I'm watching. But when you look at this microscopically, 4-hour, 30-minute, we are in extreme bearishness. And based off 42 Vision, when we reach these levels, we tend to have reversals, but some of them are smaller than others, like you could see right here, and some are stronger than others, right? When you actually look at these two right here, this one right here and this one right here. But it doesn't always guarantee that there's going to be strength, or it could just continue. From the bigger picture, things are shifting into bearishness. We've been under a bear indicator since yesterday on the 30-minute. The VIX is flying. I mean, when you look at it, you don't just have 42 Vision for stocks and the SPY. You can actually measure as well once things start to cool off or are going into strength based off the VIX. When you zoom out, we were kind of leveled off here, and a lot of people were excited. We touched a little bit close to 20 and getting below it, and things just quickly turned around. It was almost like that was the support, and it took off from there. And then gold today was skyrocketing. I mean, it has taken off faster than we've seen in a long time, and it broke through some recent resistance levels that actually were important, which is actually a resistance level way back in January before it collapsed, came back up and broke through it. And then you have crypto pulling downwards, and here we are with the SPY going down pretty fast, and then also the NASDAQ just as fast going back. And these are the support levels I talked about in yesterday's video, that if we broke out from these levels, we could go even lower. We did it here on the NASDAQ and on the S&P 500 index. Same thing, we're currently below those levels. Could we try to get back up and then use it as support and bounce even higher, that's a possibility. But right now, with how bearish things are, I am watching very carefully these bull and bear indicators, the weakness in the charts, and within the volatility, I'm going to continue to watch the SPY bot, look for opportunities every single day, because the volatility is not going anywhere and there's a lot of opportunities forming every single day in the markets. We just want to have an edge and clarity in the charts to be able to approach them with an advantage and with the clarity we deserve to maximize on the opportunities, guys. So right now, S&P 500, NASDAQ are under pressure. 10-year treasury is going higher as well. It just inflicted downwards right now a few hours ago, but if this goes right back up to 2 or above it, we can end up having a lot of volatility. But the main thing creating all of this bearishness and pulling downwards, it all started with the Fed meeting, having an emergency meeting this Monday coming up, and then the CPI data and today consumer sentiment report, guys. This was huge as well. This is big. We missed it. The emergency meeting is pretty big as well. And then here we are with the CPI data showing the inflation numbers. Fuel and oil went up. We also have here energy going up. We also had food spike up. We had also down here energy kind of leveled off, but still it's high. Commodities here, and then it went up. And then we have here shelter and medical care services spiking up as well. But these are the hottest: used cars, energy, fuel, gasoline types, energy commodities, just energy in general, the whole energy sector. And now it's going to get even more inflated with everything going on globally. So this is pretty big that we were just at a point, I stated in yesterday's video, where month over month, we were hitting an inflection point because the highest month was October. We went from 9 to 7 to 6, 6, kind of consolidating. And what I was hoping for is in February and the months moving forward, we would go to 0.5, 0.4, and eventually cool off and find a happy medium, right? And eventually that can pull this down as well. If these spike up, again, all the energy sector spikes up again, this won't actually cool off no matter what else cools off in the list. And it could actually spike up some of the areas that were kind of cooling off back up as well. So 7.5, it's pretty high. And now we need to be ready to expect what's next, right? And how is the Federal Reserve going to react to it? And are they going to raise rates sooner than we expected or more aggressive than we thought? As always, guys, thank you guys so much for watching, and let's make some money.